Hello, this is Doc Severson for the Theo Night video for Thursday, January 12th. All right, I think we are starting to see some of the volatility that we have been predicting for this month, in the month of January, right? So after an extraordinarily strong and very low volatility rally that we saw right after the election and into the middle part of December, really things have been very quiet since that point. Not only low volume, but low volatility, whether that's realized or implied. So everything has just been low. But over the last couple of days, we've started to see things shake up just a little bit. Now, this is the Dow chart, and I think this is going to be Bob Pisani's prison until finally the Dow hits 20,000, whenever that is, or if that occurs anytime soon. But a really good tool to look as to whether or not this realized volatility is starting to tick up is going to be to look at the average true range, or ATR. So I've added a 14-period ATR, the Wilder's ATR, into here, and we're starting to see this just tick up just a little bit here. Just a little bit. Now, we can always see that volatility ticks up whenever we have some type of bottoming activity. This is where we get larger range candles. This is where we get big moves like this here, like this, and back here, right? So we've seen very, very little since that point. Really, the last distribution that we've seen of any consequence has been back here in the early part of November, right before the election, when people were not sure of what were going to happen, and obviously a lot of uncertainty around that time. But what we want to look for at this time to see whether or not we're going to have markets either continuing to break out and cruise higher from here, or start a potential topping process. Now, when I say topping process, that could just be a short-term topping process similar to what we saw here. So after this big rally, we saw a little bit of a topping process here and got a little bit noisy before the Brexit came along and caused the slingshot and moved it up to the next floor here. Same thing happened back here, right? Things start to get a little bit noisy as we get into potential topping process or corrective pattern, even if that's just a very short-term signal. Now, please keep in mind, markets do not do this. They do not just drop like this, like a stone. They first get very, very noisy. We can see how this occurred here, even in 2015, as we had very, very quiet markets, and slowly, almost imperceptibly, the ATR and the volatility started to tick up here. You can see that occurring here before all of a sudden it started to release lower. We're not even close to that yet right now, but we need to have our antenna up for that. So again, here's the Dow Industrials, the Dow 30, and looking across here, let's look at the Russell 2000, and the Russell 2000 could be our canary in the coal mine. So far it's been leading the market higher, but it also can easily lead the market lower, at least in this short term. Now, the reason I think that this could happen is if I look at a different view on the Russell here. So going back over to all three time frame charts here, is that I think it's going to be very difficult for the Russell to break higher from this point here because of the fact of this extraordinarily linear move on the weekly chart. You can see here on the CHOP index, every time we've had a rally that's gone this high, this fast, kind of similar to the early 2013 point, we've had at least some corrective action come into play here and really gate things until it's able to chop that off and rebuild the energy again to be able to continue this grind. So all we're looking for on the Russell perhaps is a retest of this breakout down here. This is going to jack up the ATR, and we'll get a nice view on that if that does occur. But quite honestly, we're still in the buy the dip mode here. As we look at the NASDAQ today, the NASDAQ started off with quite some strong selling here, as we've had how many days in a row? 1, 2, 3, 4, 5, 6, 7 days in a row to the upside. And this morning, actually even yesterday afternoon, started showing this. Some instability started coming into the market, and today started the day with quite a bit of selling. And all this was just really just a reset or retest of this area here. And that's on the cash index, it's about 5,500. On the futures, it's down to about 5,000. So let's go over and look at the futures here for the NQ, and you can see how this 5,000 level was the main target down here. So this is just going to increase the ATR here. We're going to start to see more and more of this, I think, and perhaps get away from some of this very quiet sort of very mild trending action, and maybe get into some volatility here. Now, just going back to the Russell for a second, because this one is probably the best look on this. The first dip down that we have, the first material dip that we have after the election rally, and believe me, everybody keeps looking for it, and this is why we're having some of these dips that are bought. But eventually we will get some corrective price action. Eventually we will get some corrective price action. I mean, 2013 is probably the best poster child for this type of price action, where seemingly the rally goes on forever and every little dip is being bought. But eventually we do drop about 50 handles on the Russell before this is all said and done. And we continued getting these 50-point drops along there. So what I'm suggesting is the next 50-point drop that comes along in the Russell, whether or not it's 50 or 60 or 70, doesn't really matter. But the next material drop that comes back down to support, I believe will be bought and will be an excellent buying point for just about everything across the board that's currently in an uptrend. Now, that's for a trade and not necessarily for an investment. I'm not really a strong proponent of buying stuff that's up here at these prices. I think that ultimately either we're going to need to see some consolidation over an extended period of time, or perhaps to retest some of these breakout levels before they're going to be able to withstand these heights at this point. Okay, so that was kind of my point for today, is that yes, we've come from a very quiet volatility market, but we can watch the ATR to see when things are going to start to tick up, and that will be sort of a leading indicator to see whether or not that corrective action is going to come into play, even if it's ultimately going to be a short-term pullback move. That is it for tonight's report. Thanks for listening, folks. We'll see you tomorrow.